Hello everyone, welcome to another session on dollar INR. As we all know, Middle East is boiling and US Israel on one side has attacked Iran, and Iran in its retaliation is attacking the entire neighborhood. Things are getting really dirty, and financial markets, which typically likes peace and tranquility, they are very nervous. Okay, so let's look at multiple things and how our dollar INR will get impacted. Let's try and evaluate. The first chart that I want to show you is for crude prices. All of us know what has happened to crude, but what is really interesting is if you see this period, this is the period where the US troop buildup started. Okay, so and financial markets, as sensitive they are, the troop buildup itself got the crude higher. It was very comfortable around 58, 62, 63 Brent prices, and we saw when the true build-up happened, we saw that the prices went as high to 70, 72, and then when the actual war started last weekend, we saw a big gap up, a big gap from 72 to 76, and it went higher, it kept going higher, it corrected yesterday a bit, but today it is higher again. So Brent prices are around 83 currently as we speak. So this is a very frightened and a very nervous market. Okay, so this is a short term chart. Let me show you the long term chart, that is far more interesting. So this is the Brent crude prices, and this is on a weekly horizon. Okay, so I have a lot of days, I have from 2022-23, and it is still the latest time. If you look at this long term chart, please look at these blue line and this purple line. Okay, these are all long term trend line resistances. If you see, these are connecting the peaks of here and connected the peak here. Again, this connected this peak to this peak, and then there was a jump and then again back. So these blue and purple trend lines are long term trend lines. Okay, so what has happened is, in this flare up, the prices have broken above the long term trend line. Okay, so that is some kind of a sign that crude might see a breakout. It has already seen a breakout, and if the war persists, then crude might remain higher. Okay, and the way it looks like, Trump has very categorically said this war might extend to 4-5 weeks, and the way Iran is retaliating, the entire neighborhood is very nervous. The entire crude supply is nervous. Obviously, Iran controls the Strait of Hormuz, which in the global scale controls about 30% of crude supplies. So that is disrupted, and the entire region is very nervous. So we don't really expect that the crude prices are going to come down or ease up very soon, until and unless the war ends up soon, which, going by Trump's statement, is slightly unlikely. And this war might extend to 4-5 weeks, and we might see crude prices still going higher, and God knows still where. But India will be very nervous during this time. Let me come back to the dollar INR. But before I tell about dollar INR, all of us should understand that for a lot of our internal budgeting purposes, India scale, we take crude prices at the average crude price around $75 to $80. Okay, so as long as crude prices are below this range, or at least at this range on a medium term to long term basis, we do not have a worry. But if crude prices does go above 80, 85, and God forbid in this kind of nervousness it goes higher, remember historically crude has gone higher to these levels. Okay, these levels are very high, even it has gone to these levels. Okay, all 9900, 100 plus. So if God forbid crude prices does go higher, then our entire overall balance of payment for India might get really nervous. Okay, so this duration of the war is very important, not only for India, obviously for the entire world, because that determines crude prices. Okay, now let us come and see how the dollar INR has reacted and what could be the likely impact. Okay, now very clear, as long as crude is higher, rupee will face the pressure. If you would have seen in 2 days, again today the market is closed, but NDF is already quoting 92 plus. Yesterday it jumped by about 45-55 paisa. It was very comfortable below 91 on Friday, but on Monday, which is yesterday, it went above 91, 40, 50. So rupee is actually nervous, and today the markets are closed, but the NDF, the offshore markets, are already quoting about 40-50 paisa higher. It is quoting 92 plus. Okay. Now, if you look at the charts, I have told about the volatility being lower. I had told that last week, and that is why I suggested options for hedging. But now, if you see, the volatility has started to go higher. The bands have widened, Bollinger Bands have widened. Okay. Now, direction wise, if crude goes higher, as I suggested earlier, rupee will be under pressure. Okay. So, any levels to 93, 94, all those levels are possible if the RBI doesn't intervene. How RBI takes an action becomes a very, very big determinant during this period of time. Okay. But again, if there is a flood and the crude keeps going higher, lot of nervousness in the market, RBI might intervene, but they will not want to set a trend. Okay. So this is a nervous period, rupee might weaken. So what are the most adaptable or wise hedge recommendation for exporters and importers? Importers, I am sure you must be very nervous, so please hedge. Hedge using forwards, also hedge using a bit of vanilla options, that if the war does die down and the market stabilize, you are able to benefit from rupee recovery. Okay. So this weakness will help the dollar exporters, so they might look at keeping some good chunk of exposures unhedged, but obviously don't keep everything unhedged. Certainly look at doing dollar puts. Okay, at this point of time, you don't really want to do forwards, because if you do a forward, you just get 2.5-3% forward premium, and rupee is likely to weaken more than that. So no point in doing forwards. You can do a small portion of forward to have some degree of certainty, but the better alternative instrument is to do vanilla options. You pay an upfront premium, but you can catch unlimited rupee weakness, unlimited dollar upside. Okay, so vanilla options majority, some forwards for dollar exporters, for dollar importers majority of forwards, and some vanilla options to diversify risk. Okay, so that is it from my side. Have a great evening ahead.